Thursday, May 22nd. Market analysis, Stan Ehrlich. Good morning, 10:05 California time. A little after the middle of the day. Now, you guys know I started out with stock market indexes, go to futures, and I'm still watching about 4 different stocks. Tesla, a couple other well-known issues, Carvana. But anyway, what have we got? The beginning of the move down, in my opinion, started yesterday. It actually started a little bit before that when we got into overbought conditions, into resistance areas, and started to make lower lows, which was yesterday. Yesterday, we had lower lows for the previous 6 days or so, with the close under all of the lows for the last 1, 2, 3, 4, 5, 5.5, 6 days. Today, we dropped down a little bit more, new lows, getting out of overbought conditions and entering our first downside objective, which is the support area. So that's come and gone now, actually as of yesterday late. So now what? I don't think we're going to see any bounce of any significance. It may have happened already. I think we're going to see lows lower than today's lows, and it may be today. Please remember, we have a 3-day weekend coming up. So Saturday, Sunday, and Monday, any traders or swing traders, investors, etc., short-term generally, that want to do something about their position in the market that could be long, and they don't like what they're seeing, could influence them to get out because of the 3-day inability to do so, as opposed to just the usual 2. So 3-day weekends are a little bit more important than just 2-day weekends. Having said that, I would not be surprised to see a lower close today, or relatively steady, but nothing big on the upside. And maybe more downside pressure, especially if we don't go anywhere up today and go down some, not too much. I don't want to get too oversold. I don't want to go down a huge amount, say 15 or 20 gigantic points. That would put us into oversold territory maybe. It may even close a gap down here quickly at 57.13, which I do expect. But I think it's going to be next week, which is going to be a 4-day week. So that is my next downside objective, although I can't rule out 58.01, the bottom of this little support area. But that should, if it does at all, bounce the market slightly. So I am really looking for the 57.30 to 57.11 gap to get closed. Then the most I'm expecting at this point was to be down a little below 5,600, maybe as low as 55.50. That is my downside call for the various levels, of which there are a total of 3, down to this slightly under 5,600 area. 1-minute chart shows it dropping off a bit here for the last approximate hour. After it made a new high for the session. I use the word session because in the old days, if you said new highs for the day, that's exactly what you meant. There was no pre-market. There was no afternoon futures contracts that bled into midnight and overnight and the next day. That's the session time period, which is 23-hour long session. For forex, the session starts and ends in a split second, and it's 24 hours straight until Friday afternoon, and then Sunday afternoon it reopens in forex, the euro dollar, the old FX markets, and doesn't stop at all until Friday afternoon. So anyway, for the session, which started at 4 o'clock California time yesterday, 3 o'clock California time yesterday, going sideways. Usually there's not a lot of movement in the afternoon markets and nighttime, which there wasn't. But around 4:15 this morning, something happened. Market dropped into new lows, made a new high for the session, didn't go anywhere, came down, didn't go anywhere, went up, new highs, didn't go anywhere, and now we're back to where we were, a few minutes after the session started yesterday afternoon. That's where we are right now. Down very slightly, just a little, but down. Okay, so I'm looking for lower levels. There's a very large gap to close in the SPY down to 567.25-ish. Slight new low, little support, going nowhere at the moment. Same comment as the E-mini, of course. Next, SPY. Wait a minute. I've got something out of order here. No, I don't. SPY 1-minute chart. Minor new lows, a little bit of a dip. I do think it's going to make a new low for the session, and in this case for the day, because it doesn't open until 6:30 this morning. And there's the session break line, this vertical line right there, and that is 1300. All of a sudden, 1 o'clock yesterday afternoon changes to 6:31 a.m. California time with a very, very slightly lower opening. So, as of yesterday late, when it was the bottom of a fairly substantial break and a breakout to the downside, in my opinion, nothing. We're just waiting. But I do think I'm going to see lower levels. Now, we did get an official ER sell signal yesterday in the QQQ. Unfortunately, it's the only one that actually had a bearish engulfing and my custom RSI overbought condition that qualifies for changing the color of the candlestick bar to red. That's the signal. Green means buy, and that you can't get better. That's the bottom day, April 7th. And we did pick up on April 7th and April 9th a buy green ER buy signal in every index. Check it out. Look at my video recordings. Go back to those dates. Listen to my comments if you wish. Now, unfortunately, we didn't get any sell signals at the top. This little triple top would have been very nice, and I was expecting it, but we didn't get quite overbought. The second and third rally highs, only on the first, and unfortunately, no outside down day. Nevertheless, I think we've started to move down. I am obviously looking for about 493, 491 for the first significant bounce, and I'm not ruling out by any stretch of the imagination the likelihood or possibility of 483 down to 473. Next, QQQ. Now, I do have turned on yesterday's ER1 scalp code. This is my custom code, ER1, and it has an overnight version and it has a day trade scalp version, which you're looking at. So when we had the outside down day, we went short. The yellow dotted line is our protective stop. That one lost a few days earlier, a very small loss. Scalp, out, oops. Yesterday, great. Got short, I'll just say around 520. And we're out near the close at a little under 514. Darn good trade. And it's a scalp only. ER1 scalp. So now what do we got? Well, that was the 1-minute chart on the QQQ. That's it. The NASDAQ futures almost had a bearish engulfing, but the high yesterday was just a little tiny bit lower than the high on the previous day. So no bearish engulfing. Super close. New lows for 5 days or so. New low close for 6 days or so. 1, 2, 3, 4, 5. 6? Yeah, 6 days. So today, nothing happening. But we did get back into the middle of the range of yesterday. And if you look at the QQQ, I don't have it loaded. So ER3 did get short this morning, yesterday afternoon to be more exact, almost at the high of the session, but I don't have it plotted on the 1 minute chart on the QQQ. If you really want to see it, ask me. Next, NASDAQ daily, same basic comments, same gaps to go down and close, same support areas to go back down and test. We got quite overbought. We almost had a good sell signal, but not quite, so there's no red. We're going down, in my opinion. Here's the 1 minute NQ. Next, Russell YM, the Dow Jones. Same kind of comment, although it didn't quite make the lowest low for 5 or 6 or 7 days yesterday, but it did this morning. Almost closing a small gap from several days earlier. That's a little bit too large. I should make that a little smaller, like something like that. Yeah, that's better. But there's a small gap. Then support, top area, bottom area of support. It's a range, not a number, exact level. And then there's another one. So probably 45.30 for 40,530 is in the ballpark, definitely, of where I'm looking for this next move down to finish. But I have in the back of my head something more bearish than what I've been talking about, and I just don't want to discuss it right now because we're just too early, I think, in the stages of coming down. But I'll give you a very, very rough estimate here. We go down for a couple of months. That's going to be June, July. Somewhere in July, we start to come back up again, July, August. But here we go again, the October lows. So, historically, there's a very high likelihood of August or September containing a high of a rally that ends up being a bottom at significantly lower levels, often in October. So now I've got it planned out roughly, very roughly, probably going to change quite a bit, into October. All right, and then after October, up some. There we go. Now next is the YM on a 1 minute chart, and we're bouncing a little at the moment, but pretty much sideways. And the Russell, down to support almost today for the first time in a couple of weeks. One gap has been filled yesterday, almost exactly at the low of the day. Super close. I don't have to measure it or look at the exact numbers. They're close enough for government work. Next, slightly lower on the day at the moment, around unchanged. I don't see it being the low of any kind of consequential bottom. So I'm expecting new lows very soon, today, tomorrow, early next week. Remember, 3-day weekend for all of these stock market indexes and the 1 minute Russell. Now, bonds and notes. Bonds have not done what I thought they were going to do. Yesterday, late, they crashed through the support line, the bull trend line. They got oversold in the process, and they closed way below the trend line. We do have a previous low on January 14th, which was a green, bullish engulfing buy signal, the exact bottom for months prior and months afterwards. That's the kind of green that is impressive. And that kind of red also just a few weeks ago, a month ago, beginning of April. So we're yellow again. I really don't expect it to get above yesterday's highs. That would turn it green. So I'm only looking for it to stop. Frankly, I'm sorry to say, right here at this trend line, turn around and dribble off another new low. Now, where was the last low of any major consequence? Way, way, way back here, October of 23. I'll put a line, horizontal line, from the low of October of 23 all the way across to current time frames. That's going to be down to a little under 107.20, 107.16, 107 and a half. So we're currently trading at 11.06. So if I'm right, and we're probably with a low, a rally, and then another new low. That's where the bond market's going to go next. But there's a problem. We did make a new low today since January for the year, and a new low since October of 23, all of 24, and the first half of 25 almost. We've made the lowest lows today. That's quite a substantial breakage of support. But we're not staying there. Remember, when you make new highs or new lows for a significant amount of time, and all of a sudden the market reverses and starts to pop back up like this, if it can stay higher than yesterday's close, we could have an oversold double bottom based on the low of January 14th and the low of today. So I've got to watch for that to develop. I don't think that's going to happen. I know it could. So it's totally dependent upon what we see here for the next few days and whether it can maintain stability and more strength or break today's lows. Next, 10-year notes got a tick or two below yesterday's lows, bounced back a little bit, very, very close to oversold, but not quite. One might say almost good enough, but the word almost applies. Remember, you're not seeing red on tops or green on bottoms, red on top, green on bottoms, etc., without all of the necessary criteria being met. Coming close just doesn't count. Being a technician, you've got to follow your rules. If you start bending your rules, they better be a brand new rule that you can follow again and again and again and again, or you just don't have any rules. Next, crude hit support, dropped off below it, came back up into the gold or yellow range, which is the support and resistance area. Yesterday, we tested the high of it extremely accurately. And then today, we broke the bottom, but then came back up into it. So we are at the moment still stuck between the rock and a hard spot. Also, today's low wasn't a new low, which could have happened, but came very close to it. So that little tiny low from May 15th held. I don't know. We're still sideways. I can't come to a great conclusion here. This is kind of causing some problems with my analysis, so I'm going to shut the hell up. Next, natural gas is unbelievably happening, incredibly predictable. It doesn't get much better than this. There was a small head and shoulder top that took about 2 months to form. The first shoulder was February 20. The top of the market was on March 10th. Too bad it wasn't a red bearish ER sell signal. And the last shoulder for the small pattern was a rally high on May 19th. Symmetry was pretty good. Price levels were fairly equal. It was a little lopsided, but there's the pattern. It had a neckline. It worked. Breakout. Down you go. Tested the neckline on a rally. And it finally got to its minimum objective down here. Game over. Worked great. Oversold, bounce. Now, the bounce from the low, April 24th. Let's take it back. Almost a month. What's today? 21? Yep. Almost a full month. On this date, when it started to bounce, I could have, and I probably did start to think about it, what happens if there's a rally that fails and maybe creates a shoulder and then comes down again? Well, if that's going to happen, you can measure from the highest high in the first shoulder to the high of the market and find out what the number of days was. And this line right here represents that number of days. And if you take that measurement and go into the future, which would be up to May 6th, and remember, I'm thinking about this on April 24th, 28th, early May, whatever, before it happens, then I would say my date for a high should be around May 6th. It happens to have been May 12th, only a few days later. My price level for the high should be close to the first shoulder high, and it was almost dead on, super close price-wise, very close timing-wise, and sure as hell, this damn thing turned down. So that's the last shoulder. Now, there's another nuance here that is very, very rare. You've got a little pimple on the left-hand shoulder. I don't know what to call this, but it's symmetrical. And guess what? The same number of days from that little pimple to the high of the shoulder is almost the same number of days to the high of the shoulder to the pimple on the right, which was yesterday. I started talking about this either yesterday or the day before. I think it was the 20th, the day before, Tuesday. So it's forming. It's starting. I mean, it's there so far. What next? A little sideways I can put up with, but a day or two. Nothing higher than 3.52, I hope. I don't expect. A little sideways is okay, but any time today or any time in the next few days before the end of next week, we should be breaking below the neckline. And now I have two necklines. They're not really very much apart. They don't change the story very much. One of them is drawn off the classic lowest low between the shoulder and the head, and then the head and the last shoulder for the next pivot point, which is the same in both cases. Or if you include the pimple in the formation, which you could, then the lowest low before the head is a little bit lower and a couple of 3 weeks or so earlier. And that's this line. But hell, so what? The downside objective really doesn't change but a little bit. The breakout levels don't change but a small amount. And I expect to go below both of these lines to eliminate any doubt in the same hour, let alone the same day. Then support, maybe a bounce to one or both of these lines, or between the two of them, whatever, certainly in the ballpark, and then new lows. The downside objective is slightly below 1, so I have a trouble with getting all that bearish, but that's what the market is telling me. Next, heating oil. Also between a rock and a hard spot, having a little trouble coming up with something. It looks now a little more bearish than anything else. We made new lows for about a week and a half. We are staying below previous low closes, but we're not staying below the previous low just 2 and 3 days ago, and we're still in this support resistance zone. So we could get stuck here again. Next, gold, silver, platinum, and boy, platinum has had a ride, but I think it's stopped. We have an outside down day. Key phrase, bearish engulfing. Gold, starting a move down in my opinion. Probably at least to 33,200, but that's kind of close. I would expect 31.22, and I'm not ruling out 29.97. Next, outside down day again, bearish engulfing again, silver at a resistance level and previous highs, starting a move down. First objective 32.4, but that's very close. Next is to break the lows at 31.8-ish. Next, and likely, in my opinion, 31.0 down to about 30.30. Yep, that's it. Next, the platinum market screamed higher for 2 days and stopped yesterday almost exactly at the top of my resistance. And guess what? It stopped at the top of the resistance at a tiny new high again today. For all practical purposes, that's the same price. A little under 11. Yeah, a little under 10.90. So, it's still higher on the day, not going down, but it's stopping at the same price levels at a very good resistance level in a resistance zone in overbought conditions. I think it's about to turn down and about to break today's lows. Not likely today, but early tomorrow, next week. downside expectation. 10:09. But first, 10:51. Then 10:09. Then maybe as low as 9:50. Next, engulfing day again. Although in copper, it's a bullish engulfing, not a bearish. So platinum does not have an engulfing. Could, and then it would turn red. Copper, silver, and gold have all engulfings. Gold down, platinum, silver down, platinum no engulfing, but copper a bullish at the moment engulfing. It might end up closing with a bearish engulfing with a little bit of a dip. Doesn't take much. Then probably gold, silver, and copper will all have bearish engulfings. And you know how I feel about those engulfings. It's one of my strongest things to look for, one of my most important. Along with overbought, oversold, they basically boil down to my bullish bottom of the market, ER signals, top of the market, ER signal red, 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 green bottom, green close to bottom. The ones that don't work don't kill me. I have a tight stop. I never let them go beyond the highest high or lowest low for the signal day, and that is rare. I usually have my stops moving within minutes or hours after entering the trade, closer and closer to the current quote. But that's only if the market starts to behave in my favor. If it's behaving nowhere or against me, then I'll keep my original fail-safe stop where it is for the moment. And I do get hit and get out, unfortunately, sometimes at those levels. But again, it's no disaster. All right, so grains, beans, oil, meal, corn, wheat, then cattle, hogs. So, and then some stocks. Looky what we got. Beans are up. They're getting very close to a new high for the move up since February. I want to see an upside breakout. I want to see it close above 1085, and it's getting closer and closer. Only got about 20 cents now. Not too far. That's going to make my head and shoulder bottom look a lot more feasible. Neckline, approximately 1107 or so. Huge upside potential, 1240. Next, soybean oil. Unfortunately, down a little on the day, but in a support area and not yet oversold, neutral. So all I've got to go on is it's no new lows, and it is in a support. And hopefully that's going to help it pop up to new highs, which would be following through okay. But remember, there was already a crushing blow to this bottom formation. It did have a legitimate upside breakout May 13th. It did stay 100% of the range above the neckline the next day, but it got somewhat overbought, which is not unusual on a breakout, a bullish breakout. And unfortunately, the next day, it crushed the pattern. It dropped down, way below the neckline. That's an absolute, unequivocal no-no. And it went down more the next day on May 16th. No bounce, took it 3 days, has gotten it back above the neckline. That's what we needed. And this dip is coming pretty close to another new low since the damage was done. I got to have strength, and I got to have it immediately, and I got to have it substantially. Otherwise, this is just simply a big, long, drawn-out, rounding bottom. Lows, bullish engulfing signal, that's good. Lows, bounce, support, bounce, new lows, final low, now that it's way back, almost a year ago, August 16th of 24. Then we start seeing a new high for quite a long time. And on the next low, green bullish engulfing ER cells, buy signal, we see it not making new lows for the long-term trend. So what happens when we rally? Well, it gets very close to a new high, drops off, but no new low. Now that's the second time it tried to make a new low lower than August. And it's higher than December also. And now we're well into this year, March. So after the March low, it did make a new high all the way since a year earlier, a year and a half earlier, December of 23. So all of 24 and 2025, only about a week and a half ago, was surpassed and it died. So head and shoulder bottom, no more. Bullish trend line across the bottoms, yeah, that's good. Support levels applying, hell yes, that's good. That looks good. So I've got to figure out when and where it's going to hit lows and turn around and start to head higher. And my first choice is about 47.35, but I can't talk head and shoulder on soybean oil anymore. Sorry. Just not doing it. I'm neutral to slightly bearish, hopeful bullish on soybean oil, but I gotta see it start going up. Next, soybean meal is doing pretty good. It's a new high for a few days. It's testing the highest highs for a few weeks. And for the 5, 6, 7, 9th time or something in the last month, it's testing the bottom of the trading range resistance area again. It's hammering against this resistance level a bunch of times, more than usual. After making a lower low, lower low, lower low, it's coming back up to the flat top, descending bottom. So this is a flat top triangle, so to speak. But the triangles move from a low upwards slowly until it breaks out to the top. This is like backwards. I don't know that there's a name for that, except for the backward triangle or broadening pattern. But the point is, it's on the verge of an upside breakout after testing major lows. This could be a double bottom. That would look really nice. I'll draw it in right now for you. So that's the first low. Then I'll go down to about right there. And then I'll go up to about right there. Yep. Oh, I didn't stop it. Sorry. There we go. So there's your possible double bottom. And it's coming around pretty nicely so far. You got to keep an eye on this one. It could turn out to break out to the upside, which is what I want. Then I'd be looking for a move up to probably 306, 310, and then maybe up to 325. Next, another rally in corn. Yay! Support held a week ago, turned yellow, oversold, and now the rally continues. It met resistance and overcame it. Tuesday, Wednesday stronger. Today, Thursday, a little bit stronger again. Not near overbought. So this has got elbow room. I'm looking for probably 475 without too much of a problem. And then 497. And if we can get above that, a very profound test of a bear trend line, relatively flat. I used to call a neckline, but this last low here, a week and a half ago, was just too far off the timing. That would have been the first shoulder low with a bullish green buy signal, ER buy signal on the exact low. You measure from here, time-wise, to the bottom, which, keeping my cursor and going horizontal, is that number of days right there. So that's my time stick. So from the lowest low into the future, it should have been that date, February 28th. And I know I started screaming bloody murder, oversold almost at the right time for a shoulder low. It started to go up, 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 up. And I'm screaming last shoulder low, head and shoulder bottom, looking good. And it failed and made a double bottom. So it didn't kill the formation. The last shoulder is now just a little bit further to the right than I would have liked at the time. And it broke out of the double bottom with a buy signal at the low of the second low of the double bottom. Great. But unfortunately, it got overbought at a resistance area that I didn't think was going to be particularly important. And at that point, resistance overbought, it turned all the way down to new lows. And that is much, much, much too late for a shoulder. It should have been around February 28th. I'm going to remove that line. So now what I've got to deal with is previous low support areas, 415. But, hey, a week ago it got oversold in a support area, exactly the opposite that happened in April 11th. So why can't it come all the way back up to where it was on April 11th? I don't see why not. And if that doesn't stop it, then we've got something else to talk about. But a little rally up to at least 475 and maybe 497 in the next 1 to 2 weeks. Next. At the moment, wheat is a little lower on the day, but it's already had a small rally. It's pretty good. But the problem is, and I pointed it out, there's not much bullish about wheat at all. This resistance area did stop the rally. It didn't get overbought, but it got right into that price range and then turned right back down, closing almost unchanged, just slightly higher. And now we're a little bit lower. No new high, lower low than yesterday, a little lower, and we could be starting a slip to test the lows and make new lows. And I'm afraid to say I have no other choice. We've got lower highs, we've got lower lows over almost any time period you want to talk about that's at least a month or two in length or more. And that's lasted for years since the top of the market when the war started. By the way, I have to remind you, I got a sell signal on the exact high, March 8th of 2022, the top of the market when the war started for wheat. This was an incredible double limit day from limit up to limit down after the market, as you can see, in approximately a week or maybe a week and a half, it went from 1050 all the way up to 1604, or maybe a little higher. Yeah, 1613, whatever. In a week and a half. And we got a signal on the high day. I can't say more. Next, cattle. Top of the market, bearish engulfing, perfect. Big down day the next day, good. One up day, 2.5, 3, 4. Today's the 4th. Maybe a small gap, tiny. Not overbought. There's no lower lows. We've seen higher highs. This is a bull market. Will this bearish engulfing ER sell signal survive more time? And we'll see new lows under 205. I do think that's possible. I don't ignore these signals. They sometimes turn out to be hugely profound. For many months they last. I can't tell at the moment. So I'm watching for strength to fail and for it to start to slip. At the moment, I'm not doing anything about that expectation yet because I got to see it start. But because of the bearish engulfing on May 14th, I think there's a reasonable likelihood that it could happen. Just got to wait. Hogs, rocking a hard spot, doesn't seem to want to trend up, failed. Doesn't want to seem to trend down, failed. And we're still in the same range. Pass. Don't know what to say to Miss Piggy. Next. Shell, a stock, gap down, high and last. Right up against a low earlier this week, Monday. That closed a gap of sorts. But it needs to go up to yesterday's low a little bit more, 66.30-ish. Yep, yesterday's low was 66.35 in order to close a gap. Another 40 cents higher. Could do it. After that, I think there's a good chance it could slip down and make new lows. Remember, I am looking at the likelihood of stock indexes slipping, but I can see on my other screen here, I have three big monitors that were up about 2 points on the E-mini, which I think is a new high for the day. I'll just check it real quick. Vis-a-vis the NASDAQ, it's almost the same. Well, not quite, but close. Back to Shell. Maybe a little more strength and then down a little bit. But basically, we got a buy signal at the bottom of the market. Don't forget that. I know I screamed bloody murder on April 9th. I'm not sure I was watching it on that date. I think I was, because I saw the divergence top and resistance also. Yeah, I think I was watching it. So, okay. I saw it happen at the time. I must have yelled bloody murder by it. Turned out to be good. So, up, close the gap, and then down to close another gap at lower levels to 63. Next, Apple. One of my viewers asked me about this head and shoulder bottom, and I told him the golden rule: don't close below the neckline. If you get below the neckline, sometimes it's forgivable if you close at or higher than the neckline. And that's exactly what it did on the 19th. So I'm on the fence as to whether it's going to be good or not. The next day, Tuesday of this week, it barely stopped on the way up at the neckline. Most of the day was spent below the neckline, and it closed a little below the neckline. Not obviously very much, but yesterday answered the question. Even the high of the day was smack dab at the neckline. The low of the day was a new low for the move down completely, and the close was well below all of the other lows since it began to fail. And what's happening today? Another minor new low. We're slightly net lower at the moment. I don't care if it bounces. The key here is not to get back up above 206, which I do think is going to happen sooner or later, but it's not going to be a head and shoulder bottom. It's going to be something else. And I do think it's going to go down to at least 193, maybe 190, 189, and possibly even a little lower, because that's not really that big a deal going down first, and then maybe up. So I'm a little bit bearish on Apple at the moment, kind of like the indexes. And you know what they say, the way Apple goes, the indexes go. There's a gap below the market in Tesla. It does have a lower low today. It was overbought, but what we're missing is a higher high than yesterday's high and then a lower close. And we're nowhere near a lower close, and we don't have a higher high. But what happens if it popped up a little bit more and got a tick or two above or more yesterday's high? Then you would have the outside trading range, although at the moment it would be up. But what happens if that happens and then it goes down and closes below yesterday's close? Now, that doesn't look very likely because it's got to go all the way back down to 35.14, give or take a little, maybe 34.27 or something within the dollar or whatever. That does not look particularly likely. But we first have to make the higher high, and that's a necessity for a bearish engulfing red. I do think this is going to stall out here, and I do think we're going to close this gap getting down to 306. I'm not ruling out something under support, which starts at my objective 290, and maybe we'll get to 280. Next, last one, Carvana, made a minor lower low and a higher high. So we have a bullish engulfing at the moment. And a good looking one. But we were overbought. This is not a bullish engulfing ER buy signal. It's not green. We're nowhere near oversold conditions. And the dominant factor in the last week and a half has been the overbought, with the possibility of a broad double top, large double top formation from February to May. Not super accurate. Should have stopped around 293, but instead it got up to about 311. But maybe. It depends on if we can start making lower lows again real damn soon. Today, tomorrow, next week. If I'm right about it going down, and that is my opinion, 280 to 267 is my first objective, but that's just support. There's a gap to close. You need 262 and 3/4 to do the job closing the gap. And that is my downside objective. There's pretty darn good support in that ballpark, considering also the top of an old head and shoulder top that worked great. It only took it about a week and a half to work also. Yeah, and this is Carvana. All right, let's look at the E-mini real quick. It's still got some strength. It's still near the rally highs, but not a new high. I think maybe it's going to turn down. You guys have a great day and profitable trading to you.